Hello, and thank you for joining us at exam.com for this Forex Preview video. We'll be looking at the Bank of England policy meeting coming up on Thursday. Although the political drama has quieted down and we won't get any news on the new government's fiscal plan until the 17th of November, things aren't exactly smooth sailing with the UK economy, with economists predicting it will enter a recession by the end of the year. So what will the Bank of England signal this week? I'm Cristina Marujos. Helping me look at this event is our lead investment analyst, Rafi Boyajian. Rafi, although expectations of a mega rate hike have come down significantly, they haven't exactly dissipated either. Therefore, what do you think the Bank of England will signal at its meeting on Thursday?
Well, Christina, that is right. We did see a big jump in rate hike expectations following the turmoil from that disastrous mini budget, but they have come down sharply since then, since markets have come down. So investors are pretty much fully priced in a 75 basis point rate hike on Thursday. And so even though things are a lot calmer now, of course, there is that problem of high inflation in the UK. It did in fact tick up to 10.1% in October, so it is accelerating once again, and will probably rise further as we see further increases in energy prices over the coming months. The risk, though, on Thursday is that markets are saying that if there is going to be a surprise, it's going to be to the upside. So we've got small odds of a full percentage point rate hike, but it may be the other way around. So if the Bank of England were to surprise, it is possible that in fact they might go with a smaller rate increase, such as 50 basis points. The reason for this is, of course, you mentioned the big one, of course, is that the UK is headed towards a recession. So that's a major concern for policymakers. The other thing is we also have monetary tightening coming in the form of quantitative tightening. So the Bank of England has in fact become the first major central bank as of November 1st to begin the active sale of its government bond holdings. This, of course, is bond holdings from those purchases following the financial crisis and then the pandemic. So this will also, in effect, take liquidity out of the financial system. We also have, since the last Bank of England meeting, had energy price cap being announced by the government. So energy prices, there's going to be a limit to how high they can go. And the other one is, of course, that the government has once again shuffled around the date of the budget statement. Now, after the resignation or the sacking of the former Chancellor Kwasi Kwarteng, the new Chancellor Jeremy Hunt, he's brought forward the date of the budget statement, where they're going to outline more details about how they're going to manage make the rising debt more sustainable. That had moved forward to October 31st, which would have been before Thursday's meeting, but after the new Chancellor decided to sort of undo a lot of the tax cuts previously announced, and then we also had the new Prime Minister, that's now been, as you said, postponed to November 17th. So the Bank of England is in the dark as to what's happening on the fiscal front. And again, the odds here are swayed towards a tighter fiscal policy as opposed to looser one. So that would again mean there would be less of a need for the Bank of England to act aggressively. And even if the bank were to go ahead with a 75 basis point rate hike this week, they would probably signal that this is a one-off. They're probably not going to repeat such a large increase again.
And now, taking all of this into account, what could the market reaction be? Because we've seen the pound recover from its all-time lows in recent weeks, but can it sustain its gains after the Bank of England meeting this week?
Well, it is looking increasingly likely that the rebound has run its course because, as I said, the hawkish surprise isn't looking very likely. And we're also going to get the bank's quarterly inflation and growth projections. And in the report, the Bank of England might try to guide markets towards a lower rate path. It has done this in the past. If they don't agree with the market implied rate path, they would mention that should they follow this market implied rate path, that inflation in the future would come far lower than their 2% target. So that would be a way of telling the markets you've priced in a too tight rate path. So that would of course be negative for sterling, and we had quite a warning on this, quite a pushback from the bank's deputy governor recently, Ben Broadbent. Like I said, hockey surprise isn't looking very likely. And so if we were to get any boost to the pound, it would more likely come from the US central bank, the Federal Reserve, where there is speculation that the Fed might make some kind of a dovish pivot. And so should we get a softer dollar, then that would be the pound's best chance of extending its latest rebound.
Remains to be seen. Rafi, thanks so much. And thank you for joining us at xam.com for this Forex preview for the Bank of England policy meeting coming up on Thursday.